In this brief video, I want to explain why I think gold is so complementary to property. You've probably already got a property portfolio which you're very happy with, but I want to show you how you might be able to make it even better. 1 + 1 could equal 3 if you combine property and gold. Working together, it may be possible to not only build on what you already have, but also protect it. Let's go. First up, you need cash flow. In terms of cash flow, gold is everything property isn't, and vice versa. With property, you get a nice income from the rent. You don't get that from gold. But what you do get from gold is liquidity. You can sell it quickly. Property is an illiquid asset. It takes time to buy, sell, and not only incurs high transaction costs, but also the risk of a sale falling through. You don't really get that with gold. With property, if you need cash quickly, it can be hard to get your hands on it, especially if the market stagnates. Not only is it illiquid, but it's chunky. Why sell somewhere for £200,000 if you only need £20,000? You can't just sell the spare bedroom. Gold is divisible, so you could buy it in amounts that you might need the cash for. For example, if you've got £100,000, you could get 10 bars that are worth £10,000 each. You only therefore need to sell a few if you need some cash. Holding gold provides a cushion if you need access to cash while holding on to long-term property investments. Let's talk about diversification. Gold and property are not strongly correlated. Their prices don't usually move in the same direction at the same time. So when property markets are flat, gold may hold or increase in value. Yin and yang. There's also the currency angle. There's a good chance that all your properties are in the same country, probably the UK. That means you've got massive exposure to sterling. Great if that does well, but if it takes a bath, you've got no diversification. Gold has global demand. You're taking a risk on the gold price and not the currency. If there's a recession where your properties are and values and rent get hit, it doesn't impact your gold. Now let's talk about gold as a hedge against inflation. Both gold and property can act as inflation hedges, but in different ways. Gold will probably preserve your purchasing power if we get inflation. Property, on the other hand, benefits from rising rents and property values over time. You've got both bases covered. Crisis and economic cycles. During economic or geopolitical crisis, gold typically performs well as a safe haven. Property may underperform during recessions, especially commercial or luxury residential sectors. Gold can cushion portfolio losses during such times. Finally, you've got capital growth versus capital preservation. Property is often geared towards long-term capital growth and passive income via rent. Gold is geared more towards capital preservation, especially in times of uncertainty or market volatility. Making money is one thing, keeping it is another. I made my money in property. I love it, but I was told never to love anything that can't love you back, and property certainly can't love you back. Which is why I don't want all my eggs in the property basket. For more information, please visit my website, The Gold Programme.